The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN. We kick things off and talk about some market volatility overnight. You drive higher in the S&Ps. We were as high as 67.19. You were up about 1% in the S&Ps right now. We're up by 0.4% or 25 points higher in the S&Ps at 66.83. But you see a little bit of a sell-off in the last 20 minutes or so. NASDAQ 100. We were up to 24,762, so you just lost about 100 points, but we're still up by 0.8% or 195 points in the green. And the NASDAQ, the Dow right now, up by basically flat, up by 14 points. We just gave up 350 points. You got a little volatility overnight. You talk about it, man. How about the Russell? Okay, Russell, we just lost a full percentage point in the last hour and a half in the Russell. Bitcoin this morning, up by $1,500. You see the acceleration to the overnight session at 118. We're at 117,475. We jump over to yields. Fed in focus. How about that one? For lower price, higher yields. Okay, we got initial jobless claims this morning, right? Lower price, higher yield. And why is that? Let's jump over the headline as we do it. And it's a tantalizing headline. Drop by the most in almost 4 years. It sounds a little bit more drastic than it is, though, folks, because here's what I would say. You come in at 231,000. We were at 260,000. Now, what's always remarkable is initial claims, okay, it's not like they're predicated on continuing claims, right? You have initial claims on a weekly basis, and those are initial claims. Now, the continuing claims number is a big number. We saw a spike. It was worrisome, but guess what? The worry abates. Continuing claims, okay, declined as well, 1.92 million. So that's some of the action you're seeing right here out of the gate. As we get lower price, you get higher yields coming at you right now, and we have claims. Yeah, a large jump in the prior week. Now, that period that had that spike here to 264, that was Labor Day, and you can have more volatility around holidays. Also, the advance was mostly concentrated in Texas, which a state official attributed to attempted fraud. Texas said the prior week's jump reflected layoffs in multiple industries, including wholesale trade, arts and entertainment, healthcare, and technical services. But nonetheless, it's a strong number, and you say, man, how much are they going to be able to cut if we're really pulling back like that on an initial basis? And we will see. But nonetheless, we have yields this morning on the rise. We're at 4.11, just like that, folks. 4.11. We take a look at the daily on the 10-year. Whoop. That's your weekly. There's your daily. And the worrisome part here is, boy, we come in, we test the highs from the tariff volatility. And from a technical standpoint, folks, that's some selling yesterday. We'll see if we get some follow through today. But we got a little bit of rollover right now. And we'll see where we go from there. We jump over the dollar, DXY, 97.26. We get a little bit of a bounce. We had some volatility yesterday on Fed Day. Drive to 96.21. The chairman takes the podium. He calms those, thinking that they're going to be on a cutting path. He talks about meeting to meeting. He talks about a risk adjustment cut. And now we get the initial jobless claims dropping by the most in 4 years this morning. This is part of the worry, right? We have inflation. We have retail sales heating up. We got some weak numbers on the jobs front in the last few months. But is that indicative of the weakening? Listen, Chairman Powell was strong in his words, man. He was saying yesterday in that press conference, right? He was talking about how they were seeing numbers beyond just the payrolls that indicated weakness in the economy. We'll see if that plays out. Dollar today up by 41 ticks. 41 pennies, 97.28, and you got gold pulling back. We got a spike yesterday at 37.44. Overnight, you were down to 36.66. How about that? We're at 36.91 right now in gold. You jump over to silver. Silver down by about 7 pennies to 42.06 right now. We jump over to the VIX. 15.11. You drive to 14.33. How about that for a volatility suck out? 15.11 right now on that VIX. Very little volatility priced into this market. All right, and let's go to the mover in the morning. How about it? Now, something to be aware of, folks. And I this is the first thing that came to my mind when I saw this story. Man, I hope this story of the U.S. government picking winners and losers does not go bad, okay? Because Intel is getting a $5 billion investment from NVIDIA. Well, the U.S. government is an owner of NVIDIA, so NVIDIA is investing money in the U.S. government. You don't think this all plays into the negotiations going on with China, the U.S., NVIDIA, their chips, Intel, okay? You better believe it does, okay? NVIDIA is going to co-develop chips for PCs and data centers. Do you think this deal would ever be going on, folks, if the U.S. government wasn't becoming a private investor in private businesses? These are risks you better be categorizing. Doesn't mean it's going to go bad. Intel shares getting rewarded today, okay? You see the spike from 25 to 32. Yeah, you're talking about a spike of $7 right now. That is almost a 30% rise, folks. Okay, and you jump over to NVIDIA shares this morning. And we're talking about a company that's valued now at $18 billion. Oh, excuse me. What am I looking at? Yeah, no, that's the 100. I was like 18, $151 billion. Not bad, right? So a simple $5 billion investment, but that's the first thing I thought. I don't think this deal happens unless the U.S. government's picking winners and losers and becoming a private investor across the board in the companies that they choose. No timeline for when the first parts will go out, but yes, for $5 billion is the number. Intel's going to use NVIDIA's graphics technology and upcoming PC chips and provide its processors for data center products built around NVIDIA hardware. And it's going to combine NVIDIA's AI and accelerated computing stack with Intel's CPUs and the vast x86. I mean, if you think that, yeah, nonetheless, right? I don't think this deal would be happening if it's not the case, but nonetheless, that is the deal. And it is happening. And they're going to have a partnership. We appreciate the confidence Jensen and NVIDIA team have placed in us with their investment and look forward to work ahead as we innovate for customers. Yeah, and at Wednesday's close, Intel had a market value of $116 billion, meaning NVIDIA has taken a less than 5% stake. And now you see, though, that number is what? Up to about almost $150 billion on that rise. Yeah, and how about that part? All right, you talk about a turning of the tides. As recently as 2022, Intel had more than twice as much revenue as NVIDIA. Well, that's not happening anytime soon in the future. So they go from having twice the revenue in 2022 to NVIDIA having 4 times their revenue in 2025. Quite a 36-month run. NVIDIA on course for sales of $200 billion this year alone. Come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's right now giving back some of those gains yesterday as we got to move in yields right now to higher yield. And, initial jobless claims just so far down the totem pole, folks, for the economic data. Like, I understand if you're saying, hey, yesterday, maybe Chairman Powell, okay, you go back to, let's go back to the acceleration they had, zoom in on yesterday's action in the S&P. Chairman Powell takes the podium at 2:30. Okay, so the market had already pulled back from the highs. And you got some real volume here. Excuse me. I got to go back to the S&Ps. Because I was like, wait a second. Yeah, there it is. He took the podium at when the market was accelerating to highs. And boy, the whole time he was talking, right? This thing trades lower, but at the end it picked up a bit. He ended at about 315 or so. So the market was already back to 66.70 with some recoil. But what is interesting is if you go back to yields, okay, you get the lower price, higher yield, and there were already a lot of cuts priced into this market, folks. You heard the terms of meeting to meeting. You heard it of risk adjustment. I talked about it at the beginning of the show. And they get 3 months of data. Let's just say they go cut in October, which they very well could. They get 3 months of data before December. 3 months. You're going to get September, October, and November data before they meet in December, let alone what they do in October. Market thinks that they're going to cut again in October. Okay. That's yesterday's action in the S&P. But what I'm going to bring up is surprising that we go so far below yesterday's action, but hey, maybe this is yesterday's action peaking above, as in we get initial jobless claims. Folks, 30,000 jobs on a weekly basis on an initial claim basis is not an indication of this economy. That's one of those data points. Like 30,000 jobs, of course it's important, right? That is 30,000 jobs. I mean, some people say we got 50, 60,000 jobs is the break even of jobs we have to add every month right now to break even. Immigration's come down. That number's come down dramatically. We have less workers coming in the country that are ready to work. We have less workers that you have to add to keep unemployment where it is. But 30,000 jobs on an initial basis, okay, declining. Continuing claims also declined. Much more important number, in my opinion. Continuing claims as to how it reflects on the economy. So you got quite a reaction going on this morning on the initial claim basis. There's your 8:30 number, right? So it all starts kind of at 8:30. You were at 113.08. We're down by 10 ticks, and we got the 10-year right now at 4.12. But initial claims is not going to freak me out as to, oh man, this economy's on fire. There's a lot more that goes into it than initial claims, and the volatility on a weekly basis, right? That's 5 days of, it's just such a small sample size, folks. And if you understand statistics and variance and N and sample size, the variance that you're going to get, I'm always actually surprised that that number doesn't vary a little bit more, because there is a vast variance when you're talking about 5 days of data. And the reason why it doesn't always translate into the economy is because people get laid off. They're in businesses that just might not be succeeding. Maybe they're bad businesses in a bad industry in a good economy. There's a healthy churn within an economy. So over any 5-day period, you're getting a variation. There's going to be a lot of variance that comes into that. We saw that potentially last week with Labor Day, where you get even more variance, right? We're above 260. Now we're at 230. I'd be paying attention to the chairman and his words. CPI, non-farm payrolls, wage data, a lot more important than the initial jobless claims number. Man, look at the NASDAQ. NASDAQ 100's still a solid 650 points above the lows of yesterday, and we're a solid 250 points above where you came into that number yesterday. All right, we talked about Intel. You jump over to NVIDIA. The market likes that one as well. We were higher anyway, but we're up to 175 right now. You get the news with Intel, but this thing was going to open higher regardless. NVIDIA shares. How about another $5? Remember, folks, NVIDIA's got about 25 billion shares outstanding, I think. 24.3 billion shares outstanding. The thing's up $5. $125 billion market cap gain overnight. Nonetheless, Intel, higher by $5. You jump around to some of the other Magnificent Seven. Amazon, up by about $1 to $232. You jump over to Apple shares, up $1 to $239. Microsoft, trading flat at $5.10 this morning. Google shares, trading up $2 to $251. And Meta. All right, so Meta has their event yesterday. They talk about the glasses. You're trading up about $1 to $2 right now on Meta. I tell you, folks, I'm not going out and I'm buying $900, $800 Meta glasses yet, okay? I think it's $799. Yeah, $799. But I saw a few glimpses of the videos this morning that they were showing, and I said to myself, I gotta watch these things. They seem pretty cool. Now, features a screen in the lens. This is where the future's going, folks. Phones are going to go away, and this is why Apple's going to be worried. Okay, this is one of those outlier risks on Apple. Now, Apple's going to have their own phones, right? When phones turn into sunglasses, Apple's going to make Apple sunglasses. They're coming. Okay, so it's not like they're just going to get eaten, but you're going to have OpenAI is going to have physical products in there. Okay, and this is the first glimpse where I look at this, I say, man, you know, what really is preventing somebody now, the Apple ecosystem, okay? I don't even want to bring it into this because it is so entrenched to get away from that ecosystem. It's going to be difficult, the services you use, everything. But yes, turn-by-turn directions and maps, you're showing it all on your glasses. Integrated display can serve as a viewfinder for the camera on a user's phone, okay? So it ties in. I saw a part where it was actually like almost 3D imaging an area, so you're using your glasses to 3D scape an entire area that you're in. Not sure if this article referenced it. They're going to be available in 5 days, September 30th. They're going to include the wristband, 2 sizes, 2 colors, black and brown, and they are sold by Luxottica, which Facebook is now an investor of. The Meta Neural Band wristband. 18 hours of battery life. And they got Ray-Bans in there as well. 3K video recording. Yeah, and that's the one. You know, we'll pull it up, but this is where the future is going. Zuckerberg's not messing around, man. You take a look at a longer-term chart of Meta. Look at this thing, right? Now, you want to talk about it, folks. This could be an A to B, C to D that brings Meta up to $11.45. That was a straight line move from $88 to $7.51. This is a weekly chart we're looking at. You get a high out here of $7.40. And we're chopping around that area. We're trading at $7.75 right now. We're coming back for the opening bell, folks. We'll talk more Meta. We'll take a look at Intel, NVIDIA. We're coming back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps right now up by 25 points at 6684. We're up by 0.4% in the S&Ps. NASDAQ, we're up by 0.8% or 200 points. The Dow rolls over, negative by 0.1% or 23 points in the red. And the Russell, giving back some of those overnight gains, up by just 17 points or about 0.7%. And the Russell had been up to what was the high here? 2467. So yeah, you're talking about almost a 1% pullback. And look at the volume we're getting out of the gate. You jump over to Intel shares, digesting their new investor, NVIDIA, to the tune of $5 billion. You're up by 25%. It's a staggering number. Intel is still a staggering size of a company. You're talking about a company that was $111 billion, but guess what? You're teaming up with NVIDIA, and the market's no fool, folks. Okay, in the short term, you better believe it's a good thing. Okay, it's only in the longer term that you're going to be able to figure out whether the state and the government picking winners and losers. Okay, and listen, we need chips. Okay, we need, domestic production of chips, of AI, of all that stuff. But this deal of being a private investor, so now what you have is, right, you have the government investing in Intel. You have pressure for other companies to do business with Intel because of the fact that the government's a beneficiary of that, and that's where the government is, and that's where the government has chosen to be an investor. And are they really the ones that are going to be? The market has not chosen them as the ones. The government is choosing them as the winner, folks. Okay, now there's other ways to do that, right? Without being a shareholder, without diluting shareholders and taking equity from a private company. So if it was that easy, we'd be doing it forever, folks. This whole deal that nobody seems to relay the risks of the government picking winners and losers and investing and becoming a shareholder and diluting private equity, public equity. Intel's had problems for a long time. NVIDIA would not be making this deal. They wouldn't say, what we're going to do? We're going to go team up with Intel. Nah, this is so, that's, hey, short term, you better believe it's a quite a lifeline for Intel shares, and you're up by 23%. But boy, be aware of those risks, because you still have a company that's been faltering recently. NVIDIA up by $4.50 or 2.79%. We jump over to Tesla shares this morning. Quite a run for Tesla recently. Take a look at the daily. Some decent volume. We had a little bit of a pullback yesterday on some volume. We'll climb above that, a couple days ago. A few days ago now, excuse me. What day was that? Let's get it straight. Yeah, Monday a slight pullback. We had, look at the volume. September 17th, you get above it with less volume. Yesterday you do 106 million shares. You get above the day we did 163 million shares. We keep our eye on yields this morning. All right. And we were talking about it, folks, and you better believe it's a story of buy the rumor, sell the news coming into Fed Day. Yield 4.12, just like that, 4.12%. And it doesn't mean that yields are going to rise dramatically. It just means that there's a lot of cuts already priced into this market. I got to delete that one. That was from yesterday, 4.02. Add 10 basis points to the 10-year, 4.12, just like that. And we're rolling over potentially right at that April high, which technically is a little bit worrisome. We jump over the dollar right now, and the dollar, 97.40. On a weekly basis, we're bouncing from the lows. We put it back to a daily. And yeah, you breach the low. I mean, folks, hey, we say it many times on this show. Okay, sometimes you don't have to be a technical genius to say on the chart where you're going to face support, where you're going to face resistance. We come back down to that July low, and the dollar catches a bit. Doesn't mean it's going to hold, but yes, that is an area of support right now at about 96.50. We hit 96.21 yesterday. We're trading at 97.42 right now. All right, jump around to some real estate. How about this one, man? So certain pockets of real estate, office buildings, doing just fine. How about Beverly Hills? Yeah, they're doing just fine. An office building, $205 million, more than double the price paid for it a decade ago. $707 a square foot. Whew. Quite a number, man. The biggest Western LA office sale in the second quarter was roughly $150 million or $512 a square foot. But there's only one Beverly Hills, right? Top quality office environments in premier markets. Yeah, that market's just fine. I'll talk about that a little bit even in real estate down here in terms of, right now, folks, rates are still with a 6.25, 6.3, something like that. You know, you can buy down points. Monthly mortgage payments are expensive when you're getting a 30-year mortgage at that interest rate. And the last thing people want to do is sign up for a 30-year mortgage, sign up for a monthly payment, taxes and insurance in there, and then have to spend thousands to repair anything in a house. They're looking for high quality, high areas, and that's where I'm seeing it in even St. Pete. And, you know, if you're moving a house, folks, if you're in that market, I encourage you. Like, I have a house up that I'm thinking about moving, and, you know, I put a new roof on it before I even thought about it. Because that's where you are in this market, okay? There's a supply. You have to stand out. You can't be part of the pack right now. The market's doing okay, but there is a supply of housing, and you don't want to be in the middle to the bottom of that pack. If you're at the top of that pack, you know, you got a beautiful house, doesn't need much repair, it's move-in ready. People can make that calculation in their mind right now. The other side of that equation, though, when there's work to be done, the roof might be a little bit tough. People in Florida face a lot of insurance problems with roofs, with insurance companies saying that they're not going to insure you. You bump up against 20 years, you start facing grief. And roofs can last for a lot longer than that, but insurance is running the show. So that is where the market is in real estate right now in Florida as well. So not surprising. The haves, the have-nots, you know, prime real estate, prime areas. People who are doing well in this economy are doing really well in this economy, okay? And you look at this market at 6,700, folks. A lot of people have had a lot of money in this market you don't have to have a lot of money in this market for a long time, folks, okay? You go back to having money in this market 10 years ago, and you're up 3.5 times your money. And that's cherry picking a high, right? I say that's cherry picking a high, as in that's going back to 2000, when the market just went from 600 to 2000. And I'm running the comparison then, saying, man, anybody in this market for 10 years is up 260% from their money. Right? If you got 200 grand in the market, you got 670 grand. It's amazing. You got 200 grand in the market in 2015, you got 670 grand. And that's not using margin. Okay? And that's not counting if you had money in the run up on the lows. Could cherry pick the highs. It has been quite a run. The haves, have nots. Whew. Yeah, it's not stopping. Look at this 10-year. It's not stopping, folks. All right. Make your decisions, folks. We'll come back. We'll talk about it because this might be a little bit of a shift here. We're seeing it play out. Okay? You're getting lower price. You're getting higher yield. You get a little bit of dollar strength. Gold pulling back. Market digesting. Fed day. And we're moving forward. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the 10-year, 112.24. You got the 10-year yield right now. There's your 5-minute. It's not stopping. We keep making lows right now, folks. And you were talking about a yield now approaching 4.13, almost 4.14, just like that. We were at 4% at the peak yesterday. We came into the Fed day at 4.04, so just like that, 10 basis points. You know, when you're talking about housing, I've talked about it before, folks. If you're thinking about getting a house, I would think about getting it right now, okay? Because the risk is there's a lot of cuts priced in right now. And the best part about one of those mortgages that you get, okay, residential mortgages, it's basically like an option that you have a prepayment penalty that the bank does not. Yes, you're paying closing costs, okay, but you always have the option to refinance. And there is a risk that rates are going to go up from right now, folks, okay? There is a risk. I know it feels like all the pressure's to the downside, but market forces are bigger than political forces. History says that. Don't forget that. Don't think that Trump just runs everything and can command a market to lower mortgage rates and long-term rates and borrowing costs as the debt goes up trillions. You know, short-term, you better believe there's massive influence from the president. But longer-term, there are drastic risks out here to cutting in an environment where there's signs that the economy's actually all right. You got David Tepper out there saying that the Fed could cut a few more times, but easing too much risks entering danger territory. Folks, it's not often, okay, that you have billionaires out there saying, man, the Fed's got to be careful, right? There are risks out there, okay? Tepper feared that the Fed cut rates while inflation hasn't fully tamed. Demand can pick up faster than supply, reigniting price pressures. Too easy monetary policy could potentially create asset bubbles as investors keep flocking into riskier corners of the market. Short term, we all love asset bubbles if you got assets, right? Yeah, the risk is in the longer term, and it's not stopping. As I'm coming to you, man, this thing just keeps dropping. Okay, no one's locking in right now. That's the 10-year. You jump over to the 2-year. Quite a move on the 2-year, folks. Okay, the Fed may be cautious, is what this market is saying right now. They're taking very seriously that, you know what if this is a risk adjustment cut and they're going to let things play out? What if this is a meeting-to-meeting deal and the market read too much into the cuts? Remember how many times the market's gotten ahead of the cuts, folks, okay? We have this massive recency bias of living through the environment where rates were 0% for so long. Folks, rates cannot be 0% when we're dealing with this generational AI productivity escalation. Okay, can you imagine these tech companies getting to borrow money at 0%? And we're not near zero. But we have this recency bias that rates need to be lower, that the 10-year at 4% needs to go down, right? Mortgages at 6.4% are unaffordable, right? All this stuff. If you take out the recency bias of the Fed being at 0, mortgage rates being at 3.75, and you go back to prior to the financial crisis that preceded rates being at 0, there's a massive different environment that rates used to be in right now. You look at these rates up and down the curve, and they're pretty moderate, folks. All right? And yeah, we're higher across the board. You look at the 10-year right now up by 4 basis points. The 10-year excuse me, I said the 2-year up by 4 basis points right now, right here. This is a 2-year. Let's zoom in a little bit. You got the 10-year up by 6 basis points, and on the 30-year up by 7 basis points. Yields rising on a longer-term basis. Now this one is interesting. What is ultra-processed, right? How the government defines ultra-processed. You better believe it's going to have a big impact, man. People do not want that label, and I don't blame them. You selling food, you want that? Not even close, especially if this is what you're selling. If you're selling like Greek yogurt with high protein, no fat, the last thing you want is ultra-processed, but this is going to be the difficulty in what exactly does that mean. So this is talking about Dannon developed a process for its Oikos Pro to create a high-protein yogurt with low sugar levels and a smooth texture. The industry is working to ensure that this process doesn't get that yogurt and other products defined as ultra-processed foods. Now, folks, I'm going to go out on a limb here, but I'm going to tell you something, okay? This might be the best thing you heard all hour. We're doing a financial show, but listen, open up the ears, okay? Open them. Everybody listening? If you're eating Oikos 000 yogurt and you're getting 20 grams of protein with like 0 fat and 0 sugar or whatever it is, folks, that's not the problem in your diet, just so you know. That's not the ultra-processed problem in your diet. It's one of the healthiest things out there, okay? Now, the thing I will say is that sometimes you think you're getting Greek yogurt and you're actually getting like a dairy protein substance, for lack of a better term, okay? Folks, this is not the problem in our diet, okay? And ultra-processed, you better believe it, but this is not the problem. Yogurt, Greek yogurt, one of the ones I'll tell you what I love in my house, okay? Me and Tommy. I like let's see if I find it, Light and Fit yogurt. Is this a Dannon? Who makes this? Let's see. I'll pull it up, because this is one of my favorites. Light and Fit, who makes it? Yeah, Dannon makes it. Of course they do. Let me pull it up and show you, because this is one of my favorites. You want some healthy yogurt, folks? This one's my favorite, right there. All right, Dannon Light and Fit Greek yogurt, vanilla. You ever try it? It's delicious, okay? And yeah, there's a process that goes through everything. Ultra process. What is ultra process? What's processed? Yeah. You get into some of the nutritions of these folks, okay? It's 90 calories, no fat, 3 grams of added sugar, okay, and 14 grams of protein in 3/4 of a cup. So the battle is on, though. The industry is working to make sure the process doesn't get Dannon's yogurt and other products defined as ultra processed. Yeah, and you better believe it, the battle's on. And, you know, I understand why people don't like dairy as well, right? Sometimes dairy can cause inflammation, but that's not ultra-processed, all right? And a lot of times, folks, it's just living in excess. You know, it's just living in excess. And listen, we all live in excess and sometimes, okay? But eating in excess is a big core of it. Ultra-processed, of course, okay? But let's hope there's some, you know, because this isn't it, folks, just so you know. Now, yeah. And Greek yogurt especially, so healthy. For your gut, everything. $2.6 trillion food industry. Healthier items have been a bright spot for consumers pulled away from packaged foods. Greek yogurt. 74% of U.S. households, Greek yogurt. Up 2 percentage points in the last year. 3 out of 4 households, Greek yogurt. Good for them, man. It's a good area to be in, right? And they do all their anecdotal talking about different people and what they like. Vegan bodybuilders. Look at that. Hey, we got a vegan bodybuilder from Tampa. John Thomas. There you go. I like that green hair, Mr. John Thomas. Bodybuilder in Tampa. Not all processed food is created equal. I would agree in the same way, folks. If you're worried about eating yogurt, like the 000, triple Oikos, don't worry about that, folks, okay? That's not the degree what you need to worry about. And hey, one man's opinion giving out health advice on a finance show, right? Take it for what it's worth. But yeah, you better believe the battle's on. So pay attention to that one in the food sector. Ultra-processed, as the companies lobby to keep their name off of that ultra-processed list. Markets catching a little lift. S&P's up by 29. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we got the S&Ps right now. Hopefully, all right. We got the S&Ps up by 24. We got the NASDAQ up by 201, Dow up by 23, and the Russell up by 24. Talking a little bit of Fed. No, we aren't talking Twinkies just yet. No Twinkies just yet. We're getting them riled up about the ultra-processed in the den. So we talk about yields, all right? I like this opinion piece from Mr. Dudley over here from Bloomberg, okay? And the part I just want to focus on, he's talking about 3 takeaways. The first one he says is that Powell's still in control, even with the political pressure. The second one he says is that there wasn't a huge adjustment here. Okay, this is not much different, as in the pre-FOMC projected Fed funds rate is in blue, and then the post is in black. Little bit higher, but folks, look at how close you are to where the market's thinking, right? Okay, so previously you were thinking maybe the Fed will be down to 2.86% by the end of 2026. Now you're thinking 2.93. Folks, that's 7 basis points by the end of next year. Okay, the market is still expecting rapid cuts from above 4% to below 3% in the next year. Okay? That's a lot of cuts that this market's priced in. It would bring their Fed funds rate down to about 2.9%, and that would basically be splitting the 2.75 to 3 range, and right now we're splitting the 4 to 4.25 range, so that would be bringing it down about a point and a quarter. A lot of cuts priced into this market right now. We have the 10-year at 4.12. We jump over to Intel shares, digesting the NVIDIA $5 billion investment. NVIDIA up by $6 right now. Intel up by $6, 25%. You jump over to NVIDIA, up by $3. All right, folks, thanks so much for tuning in. We heard him. Basil's ready. He's getting ready. He's coming up next with the Tiger Technicians Hour, folks. And I'll see you this afternoon. Have a great day, everybody.